And we are live, Silver Doctors Live. It is Wednesday, July 24th, 2019. I'd like to welcome everybody for joining us today. I will be your host for today's show. My name is Paul Half Dollar Eberhardt from Silver Doctors. Joining me is my co-host today, James Anderson of SD Bullion. How you doing today, James?
I'm doing well, Paul. How you doing?
Doing good. It's nice to see gold and silver hanging in here, consolidating. I think we're in a nice, healthy consolidation. Gold between 14 and 14.50. Silver between, silver's actually above 16.50 right now, so that's pretty nice. I was expecting low 16s this week, but it's nice to see that taking place. We got a few people joining us in the chat, and we got a few different good topics that we're going to be going over today. So I'd just like to take a second to welcome everybody here. Okay, and anybody joining us, if they want to shout out, say where they're from, where they're watching us from today or this evening, depending on what side of the pond or what side of the world they might be on, we'd love to hear from them. And as far as a few topics to get into today, James, I just want to go ahead and kick this off talking about the Fed and the dollar. Does that sound like a plan?
Yeah, always. Let's run with it.
Okay. Sounds good. And the reason why I feel that I need to do this is because of this right here. And what I just did was I just put up a screenshot that I took of this Washington Post economics correspondent, Heather Long, right? And she put out this tweet on Monday saying, Trump's Fed nominee, Judy Shelton, calls for 50 basis point cut in interest rates at the July meeting. And then even in the title at the Washington Post article, it goes on to say, Trump Fed nominee Judy Shelton. Right? So there's a couple things that I have a problem with first off the bat. And right off the bat, the first problem is she's not officially been nominated. Right? It's still on whitehouse.gov. There is no official release saying that she has formally been nominated. All that has happened so far to date, and just this morning when I checked again, because I've been checking this almost on a daily basis, is just at Real Donald Trump's Twitter account saying that he's going to nominate her, but that's not official, right? So here's the thing, right? She's back in the news. She's not even on the Fed yet today. She's supposedly this gold standard advocate, and she's already talking about a 50 basis point cut at the July meeting, like she's a voting member of the Fed already. So, unfortunately, I have to keep digging a little bit deeper into, is President Trump nominating the gold bug to the Fed, and what does this mean for the dollar and gold and the Fed going forward? So I've done a little bit of research, and what I've found is, Judy Shelton is already a member of the Trump administration. She's on his Council of Economic Advisors. She works for the Treasury Department. She is the director of the European, let me see what the exact title is called here. But so she's coming from Europe, right? She's coming from the land of negative interest rates. So think about that for a second. And who she is right now in her current role, she is I want to get the title right, which is why I'm scrolling down here and waiting. Okay, she is the United States Director of the European Bank for Reconstruction. That's her current role, reconstruction and development. So think about this, right? She's in Europe where they have negative interest rates. She's a U.S. government employee, and she's working with Europe on monetary policy, right? Now, Trump is about to nominate her to the Fed, right? So what has Trump also been very vocal about? He's also been vocal about wanting a weaker dollar. So here's my point, right? You have a person that is coming from Europe, right, who's been dealing with the European banking system, right, where they have negative interest rates, who is supposedly going to the Fed, and she's already talking about a 50 basis point rate cut is necessary next week. I'm thinking that if she does get appointed to the Fed, then this means that there is definitely going to be a move to weaken the United States dollar, and I think that she will be an integral part of that plan, almost as if she's been kind of preparing for this moment that we all know is coming. I've been asking some of my contacts, is a new currency war escalating right now? And they're telling me yes. So, this is just kind of like some of the background stuff that I'm looking at when I see things like, oh, she's calling for 50 basis point cut. I probably convoluted that a lot there, James, but what are your initial thoughts on that?
I just wanted to double check. Who was the first one that didn't work out? Was it Herman Cain or Stephen Moore?
Well, Stephen Moore and then Herman Cain, but I do
Okay.
not think either of them were officially nominated. It's the same
No.
story where it was only announced through at real Donald Trump, right? Which is not official. But yeah, so she's the third person now.
Right. Okay. So it's. I mean, I've written an article about the Judy Shelton thing because once her name gets thrown up there, or Herman Cain or Stephen Moore, you have a certain amount of people out there in the alternative financial gold silver industry who will say, "Oh, gold standard is coming, Trump MAGA." They'll just run with some small little thing like this and just expand it out as if all of a sudden we're going back on the gold standard. Uh, Look, ultimately, if we were ever going to do that, it would probably come from a crisis, a real legit crisis, something that's worse than even 2008, where they actually have to come out and say, all right, here are the facts, and here's what we're going to have to do. And a certain portion of the population is going to lose 40, 50% of their wealth, or something worse like that. That's essentially what would probably have to happen if you were to try and rejigger the monetary system to be more fair and equitable around the world. So the idea that Judy Shelton is going to be the one that spearheads all this stuff is pretty nonsensical. Obviously, she's talking about cutting rates, probably wanting. Trump probably thinks like, I'm sure he thinks like if we somehow can devalue our currency versus the competitors, then maybe we'll get some manufacturing back in our country, and maybe if we get some of those offshore dollars to come back and some of these corporations to build some manufacturing plants here. His MAGA followers might actually get jobs who lost their jobs after Ross Perot told us about the sucking sound going down to Mexico. So a lot of this is noise. Let's see some actions. And when they do cut basis points, it'll be interesting to see, what happens, because at some point the Fed is going to have to cut interest rates. And what you'll likely see is a pop in the stock market that won't last, just like the last few times they've done this. And then all of a sudden the stock market's going to have trouble. And Steve Mnuchin's going to have to get back on the phone with the heads of the banks, and they're going to have to start propping up the market one way or another.
Yeah, and it could even be a buy the rumor, sell the news, where the market's been going up in anticipation of these rate cuts next week, and then it sells off immediately after. That's not out of the question either.
Yeah.
One more point about the Judy Shelton is this, right? We know that the mechanism for currency intervention is the Exchange Stabilization Fund. And my point with that is she's already been appointed. She's already in the Trump administration, right? She's already working with the Treasury Department. If she moves over to the Fed, this is like trifecta. This is like Exchange Stabilization Fund trifecta. You've got, the White House, who ultimately supposedly has the authority over the Exchange Stabilization Fund. You got Treasury Department, right, which runs it. You got the Fed, which is the agent of it. So this is we keep you still on the line with me?
Hey, what's going on with the dollar, and a little bit of strength that it's shown. How strongly gold and silver have been holding up of late. It kind of gives me the sense that we're moving into a new situation for the bullion precious metals industry.
Mm-hmm.
Did you hear me through that, Paul? I just want to make sure that you heard me.
I heard you a little bit through it. The live stream actually dropped once, so I was looking at that and I was looking at you. But I see that we're all up and we're back in green now. So,
Cool.
If anybody, if we're okay, if I could get a thumbs up in the chat, that would be awesome. And I want you to just hold that thought right there, James.
Sure.
And speaking of which, let's just take a second to welcome people. Looks like we've got Shekel Clipper. He's in from Central Ohio. How you doing there, Shekel Clipper? We got people saying, hey, good morning. Largest deficit ever in this booming economy. Yeah, with this $2 trillion budget deficit coming up and the suspension of the debt ceiling to 2020, sometime in 2021. Silver under $35 an ounce in any form is a complete and total steal. I would agree with that. And so that means it's a total complete and steal right now. So welcome everybody. I believe we're fine. Haven't gotten a thumbs up in chat. Yeah, we go. Now we got a couple thumbs up in chats. We're good. So what was that last follow-up thought you had there, James?
Ultimately, we talk about it consistently and pretty often, is the fact that the United States and just the system that we've built has promised more than it can deliver. And in order to deliver what it's promised, it's going to have to default one way or another in terms of either the value of the US dollar, the fiat US dollar, going ahead, or simply say, sorry, those promises are null and void. And that's a flat out default. It's one way or another that's going to have to happen, unless The only out I could ever think of that would actually work is somehow, we come up with some new paradigm of like free energy or something where we can build another bubble on top of this bubble that we currently have. But my hunch is we're going to have to let the air out of this bubble slowly but surely. And that's when you talk about the Exchange Stabilization Fund, that's a really deep subject that a lot of people won't broach in the financial system. They won't even talk about it because it just taints them as being some conspiracy theorists or this or that. But it ultimately legally gives the United States dominion over virtually any market anywhere. If you read the actual way it's written, it essentially says the U.S. can do whatever it wants financially, and that's the law. So accept it. I mean, that's essentially what it says. So I would suggest anyone who doesn't understand what that is, maybe go read about it and do some research on it. But you can bet that Empire is going to want to move prices whichever way Empire dictates and needs it for its agenda, whether it be short term, medium term, even longer term.
Yeah, and I actually just pulled up on the screen as you were talking, just because this is. Yeah, we're not just, talking about this. This is real, right? This is the Treasury Department website, the Exchange Stabilization Fund. And I just like to go off the very first and the last sentence, right? Because it's all a bunch of legalese. But the Exchange Stabilization Fund can be used to purchase and sell foreign currencies, to hold foreign exchange, and other instruments of credit and securities. It's like, that's just a blanket license for anything you want. And it's right there. This is not conspiracy theory. This is the United States, this is treasury.gov right there.
Paul, the most interesting thing looking forward is not necessarily that the United States is obviously involved in the markets at all places and all times. More the question is, when are they going to start becoming very obvious about it and say, the Federal Reserve is now allowed to buy equities? Once that happens, then it's like, I guess mainstream by then will have to admit the fact that they're in markets constantly propping them up, constantly rigging them, constantly moving them whichever way they need to based on the agenda that they're trying to serve. But you can bet if they're running around giving 1,000 speeches every year, talking nonstop, talking way too much, that they're probably doing the same thing underneath the system in the financial industry. And anyone who's looked at the documents and understands kind of how price discovery works in these financial markets would understand that a lot of this is combination of algorithms with what they print in the press, these machines reading it and then buying and moving markets whichever way these words and these algorithms read it. And then secondly is, the New York Fed has got a trading desk. What do you think's going on over there? They've been doing this ever since there was a London gold pool and John Exeter was pushing 10,000 tons of gold out of the United States over 15 years to prop up the price. It's been going on for a lot of people's lifetimes. Many adults who are 60, 70 years old have had their head in the sand and never done the research. But luckily, the internet's allowed people in the last 10 years or so to actually go down these rabbit holes and figure out the facts. And once you've seen the facts, you can't unsee them. It's tough.
Mm-hmm. Yeah, absolutely right. And one of the things you said is an excellent transition into our next topic, and I just wrote it down so I don't forget it. But let me address and see if there's any questions in chat. First of all, weaker U.S. dollar means higher Bitcoin price, Bitcoin to 100,000. I don't know. There's no correlation to Bitcoin with anything right now, right? Bitcoin is too new to have these correlations. It was only 2008, 2009. I wouldn't agree with that. I think Bitcoin is ultimately going to, not necessarily absolute zero, but it's like penny stocks, right? It's like, you can buy thousands of stocks for fractions of a penny, right?
He's right, though. It's a market that could, possibly pop and explode. So I'm not trying to take away his thunder. Bitcoin has obviously produced pretty impressive results, going from 9 cents to over 20 grand. So can that history repeat? Yeah, it damn well could. Longer term, I think Paul, your concern is the fact that virtually anyone can make a blockchain and a cryptocurrency, and at some point, Bitcoin's going to get relegated to being inferior to perhaps something in the future.
Well, that's one point. And then the other point is that co-opted and hijacked by the government. So that's another point, right?
Sure.
It's like when they started putting What are those tracking devices called that they put in dogs? Microchips, right? When they start
RFID chips.
yeah, I was like, this is a horrible idea because they're going to start doing this to humans, right? And now you can't get a dog, you can't get a shelter dog unless it's got this chip in it, right? And like they can't even read the chip in my dog, so my dog's just got this electric signal pulsating in its neck, and it doesn't even work. But now, guess what? They're starting to microchip humans. So this Bitcoin thing, yeah, I mean, it's great. Enjoy it. I hope you can get out, but ultimately, I see a takeover coming. Because the government's not going to stand for that. I mean, we know that at the end of it, the government wants their power, and their power is their money and their ability to control it.
The money power is the most important thing to governments. That and violence, having militaries and the threat of violence. So the combination of that and then the taxing system, those are like the three different pincer attacks that are used to make people succumb to their will and their agenda.
Good points. Excellent points. Okay, but you made a great point about HFT algorithms basing things off of titles. And it wanted to bring me into a second topic that I'd like to discuss with you today, James. And that discussion is about the mainstream media anti-gold propaganda out there. And one of the things that I speculated on Monday was that this week we are going to see stepped up anti-gold and anti-silver propaganda. Why are we going to see that this week? We're going to see that for two reasons. One, because gold and silver, gold especially, right, has broken that multi-year resistance. Silver's holding in there, doing good. They're both rallying, right? We're consolidating right now, but there's no argument that these charts are bullish. So they got to combat the bullish sentiment. And then two, the Fed is maintaining their radio silence this week because they're meeting next week. So there's not Fed head interviews. They're not going around on CNBC and stuff. So the mainstream financial press has some idle times on their hands. And what's the best thing to do with idle times other than bash gold and silver, right? That's like the best thing to do. But you made up a great point about headlines, parsing it, and trading off of that. And I want to show you the very first example of the anti-gold propaganda that I have. And it can't get more obvious than this, right? This is from July 22nd, so that's on Monday, right? So Goldman says yen, as in the Japanese yen, offers more attractive hedge than gold. Bam, those hedge fund black box algos, what are they going to do? They're going to sell gold. They're going to buy, Japanese yen. All this stuff, right? So this stuff is coming. This stuff is real. It's subtle. That's just one point, right? And my point there is, traders can parse these kind of titles and these kind of headlines, and then the machines can make the decisions for them. So it's these little injections of data that can have an effect on moving markets.
And Paul, think about how niche and super high finance that is to be talking about going long the yen as opposed to gold as a hedge. It's like, how many actual investors out there reading that are actually someone who trades in yen? You're talking about a small basis point fraction of actual people who invest in the United States. So it's just a subtle way of deception of saying that, there's something better than gold out there. So don't worry about these gold prices. They busted over 1,400 and have been sitting pretty stoutly lately, but don't sweat that. Just buy some yen from a country that's 260% over its GDP in debt, and you'll be fine.
Yeah,
don't sweat it.
Yeah, complete unbacked fiat. It's just like gold, and in fact, it's more attractive than gold.
It's amazing.
It is amazing. But this is the reality that we have to deal with.
For sure.
So, and the funny thing is this is even without reading these articles. Just going off the headline, it immediately begins. But that brings me up to article number 2. So this one, let's read a little bit, right? Let's read a little bit into it. And this one is from MarketWatch. And this is interesting right here because these are the way those little subtle snipes get in, because this article was like, gold rises on, I can't remember what, just something very bland in the title. But then, in the middle of the title, they're quoting, a managing partner at Vanguard Markets, right? So obviously this person likes to make commissions and, whatever it is that they're doing at a brokerage firm or at a Vanguard Markets, right? So here's the thing. He says, so he's talking about gold's performance right now. The rally gave way, right, to a high degree of investor caution, knowing that substantial speculative length has been built up above 1400. It's like, come on, give me a break, right? We're at 1425. That's not even a 2% rise off of 1400. We're talking about substantial speculative length. No, I don't think we're talking about substantial speculative length at all. So it's just these little subtle ways where, just whether they're knowingly doing this, whether they're not knowingly doing this, whether it's on purpose or whether it's not on purpose, because they're motivated not to sell gold and silver, especially not real physical gold and silver. They're motivated to sell paper fiat products, right?
And they're also doing it in a context where it's like, oh, we know the reader has no attention. They have no attention potential, to sit there and actually read through something that's long. So they just give you these quick shortcuts. For instance, that quote right there is from a guy who's talking about his clients that he talks to, who's literally day trading or medium-term trading swings in gold price. He's not talking about somebody who's concerned about the underlying currency that's used as the numeraire across the world. He's not talking about the potentiality of the United States eventually devaluing the currency a la the pound the last time a reserve currency fell out of favor. That's not what he's talking about. And so a lot of people, they just misconstrue probably what this person's talking about. And so it's easy if you don't have any critical thought or you don't have much financial education to kind of take that quote and be like, oh, okay, well, $1,400 gold is probably too high, and I shouldn't be buying any of these prices.
Excellent points. Well said. Very good points. I have one more example of that. Let me see. I don't even remember what it is at this point. Here we go. I don't know if you can see that on the screen. Can you see that on the screen yet, James?
No,
you're going to love
so.
it. I'm just going to wait until it pops up, and I'm going to look at the chat until it does pop up.
Okay.
Because I'm looking to see if there's any questions here that we would want to get to.
Sure. Oh, there it is. I got it.
You got it now?
Yeah. But just so people out there on the chat understand the way that we're operating here, I have about a 10 or 12 second delay to see what's going on the screen. So So it now reads, Elizabeth Warren is almost sounding like a gold bug.
Yes. Yes.
And I went to read her article on Medium, which was interesting. She's pounding her chest, saying, I was there in 2003 and 2006 and warning everybody about this coming crisis. And I mean, it sounded like an egotistical gold bug newsletter writer who's telling everybody, I've been calling these shots forever. It's like, yeah, you could say bearish things and be right, every other decade. Anybody could do that, Anybody could be the same bull or bear. It's the question of being able to be one or the other at the right time that makes most sense. But anyways, the point of our article was essentially saying that, she's trying to get a situation where she's saying that, yeah, we're running deficits and they're going to be a problem, and the debt's going to be an issue, but also we're going to give away a lot of free stuff. So check out all the free things I give you, like free tuition and all this stuff. It's it's just part and parcel with the MMT crowd. It's this concept that they can just give away all these types of free things and there won't be any repercussions. If you have someone like that get into the White House, it's certainly dollar negative. The U.S. dollar is going to be sold off pretty heavily.
Yeah, exactly. And, it's funny, too, because that's from Bloomberg, right? That's from Bloomberg.com as well. I just looked at
but don't forget, you have to make sure you look. It says Bloomberg opinion, right?
I mean, it's an opinion, but it's still prominent, right? It's got a really high spot on the page. They got the words blasted on there. I mean, that's what they want out. But here's the thing, but a gold bug is not going to be talking about free money as far as the eye can see. That's not sounding like a gold bug at all. And then the other thing that I think is interesting, just about the title, right, is that, what do people associate Elizabeth Warren with, right? For good, better or for worse, they associate her with Pocahontas. They associate her with, she's just loony, left, socialist, Democrat.
That's the negative slang on the conservative side. The positive slang on the Democratic side is that she's a bank slayer. She's out there telling the banks what's up. She's going to put them in their place, et cetera, et cetera. So you have to give both sides of the coin.
You do have to give both sides of the coin. Good point. But my point is that for talking about that conservative side that thinks that her policies and words are just are crazy, point blank, right? So what is that doing? That's associating gold bugs with this kind of nonsensical policy opinions and
Right.
beliefs, right? So, it's just let's associate gold bugs with crazy monetary policy out of Elizabeth Warren from the conservative side of things, right?
Yeah.
And then and then you're right, like from the more progressive liberal side of things. Well, oh my gosh, Elizabeth Warren sounding like gold bug. What does that mean? Oh, okay,
Yeah.
so the gold bugs are all in favor of free stuff, big spending, more deficit. That's not what it's about at all.
Yeah, you got to remember too the perspective of the Bloomberg readers probably leaning more toward the Democratic left side. So gold bug's an easy word for them to use as a derogatory term because it's associated with people who are too conservative, people who are too staunch about not spending money on the poor. That's the way it's sold, is that conservatives don't have a heart, they don't bleed enough in their hearts, and therefore they just don't. They're not as good a people as we are. Because we care a lot. So, I mean, it's like pretty much any program they've ever done has been garbage. I mean, just look at the, Department of Education, how great that's been since Lyndon Johnson got in. I mean, you could go on and on about how badly things have been managed. But the idea that she's going to go around and give free tuition for everybody is it's pretty insane, because that's essentially how we got into this ridiculous tuition bubble that we're currently in with the tuition debt bubble, is because the federal government got involved with handing out loans, and it became this huge, essentially like a hog fest where all these people came in and just started loaning out massive amounts of loans to kids that, their parents probably couldn't afford to pay for it because they lost a lot of money in the 2008, 2009 financial crisis, whether it be housing equity they lost money in or the financial market. And so there's a direct, it's a direct correlation between the amount of college loans that exploded after the 2008, 2009 era versus, what happened in the financial crisis. You could just tell that mom and dad looked at their child and said, you're going to take out some loans because this money we're going to need to retire with, So it's pretty sad in a lot of ways.
Yeah, and school is way overpriced. I mean, for people who really don't understand just how overpriced school is, when I went through school through the second time after the Army, this was a 2-year, I guess you would call it like a vocational college, is what you would call it. Because that was when I wanted to get some technical education on technology, information security, computers, hardware, software. That's why I can argue a lot about Bitcoin, right? Because I understand the technology behind it. But my point with that is this school, right? For a 2-year program, this is like no room, no board, no dorms. This is just the program. $42,000 for an associate's degree program. It's just like, it's way out of control everywhere. The only thing that can really kind of sort of compete would be like your local community college. But if it's not your local community college, even the state universities now are, getting pretty pricey. So
yeah, my dad is still about to be fully retired college professor. He still does it part-time. And I've talked to Stephen Henke and other professors. They pretty much all point to the ridiculous administrative salaries and just how many people are getting overpaid in those positions who administrate the colleges. They make boatloads of money. If you look at any of the major college universities, the president of the college making millions of dollars. What is going on? Like you're not a CEO of a Fortune 500 company. What are you doing getting that kind of salary? I guess you could argue you should be, but good luck. I'd like to see you go out there and become the CEO without having any real world experience. I bet you won't get the job. Because you don't know how to run a company that actually has to make a profit. You don't. You get incentivized. You get over because the federal government came in and propped you up with all these loans they're giving these children.
Yes.
So it's just a sick system. It's a lot like the healthcare system. The United States has so many things that when you look around, it's like, wow, I can't believe we've allowed the industry to become what it's become. But
it is, and you become like institutionalized almost, right? When you get those really posh salaries. Like I look at this also like in the Army, right? People make their I never made a career out of the Army, right? But people that make their careers out of the Army, when they get out of the Army, they have a hard time adjusting to the real world because the Army is an institution, it's a bubble. Same thing with like people in prison, right? That's an institution. If you're in prison for 20 years and you get out, well, you can't really adapt. So like all of these economists and all these super high tenured professors at Harvard or whatever, they have to be all in on these positions because if they got out into the real world, that's it. They're done.
Yeah.
So I think you bring up an interesting point, about living in your own world and stuff like that.
Yeah, that works until the macro economy says it doesn't, and then good luck. You're going to lose your job, and then you're going to have to go and find some other skills in another industry because that industry just isn't propped up and bubbled out like it currently is. So at some point, that goes the way. And we're talking about the college bubble. That next 10, 20 years, that thing's going to deflate.
Yeah, and I feel for it, right? I hear the arguments. What about me? I paid off my student loan debt. You mean that they don't have to pay off theirs? I mean, there's so many valid points. The problem is just the whole system is gone. It's so bad.
I'm looking at the comments here, Paul. I see one that is probably interesting. It's probably something that we're going to be talking about next. This SG fans he's saying he's still looking for Silver Eagle sale promotions on website banners, taking a few coins. Is physical silver coin worth buying now? Prices have risen substantially over the past weeks. So just to set up maybe where we're going next.
Yeah. Is physical silver coin worth buying now? Absolutely. Silver is dirt cheap. I interviewed Keith Newmeyer from First Majestic Silver a few weeks ago, and he said, we're very close, depending on what miner you're looking at, to either just at, below, or above the cost of production. There's so many factors saying that, silver is dirt cheap right now as an investment, as a hedge against inflation, against uncertainty, for so many reasons. So let's get into that for a second. And, part of that is just a question, why do you even hold gold and silver in the first place, right? And as far as like what to hold in silver coins, he was talking about American silver eagles, right? But if we check this out, this is something that's not it either. If we check that out, that is a heck of a deal right there. Because he was talking about prices have risen substantially. Yeah, but look at that spot price on 90% silver coins, 39 cents over spot on a $100 face bag at SD Bullion right now. And I just brought in a sample of coins because you don't know what you're going to get, right? But some of them could be really nice looking, some of them could be dirty looking, some of them could be grimy, some of them could be brilliant uncirculated. Like this one's pretty nice. I mean, it just really depends. I kind of like the grimy ones and the ones that have little nicks in them every once in a while because you don't really know the history. I even got a seeded Liberty. That's super ultra rare to get, and just 90% silver. Some of them are pristine, so you don't know what you're going to get, but that is a great price, 39 cents over spot. And here's one of the reasons why I think that's a great price. Because, and this is one of the reasons why 90% silver is one of my favorite things to stack, because there is a finite supply of 90% silver, right? There is a limited amount of supply, so whatever's there has to come out of the hands of the people who own it into the hands of the people that want it. In 2015, right, as silver is bottoming in December of 2015, I want you to check out this picture that I'm going to throw up right here. And it's probably going to take you 10 seconds, so I'll just start explaining it. But on September 5th, 2016, the premium over spot for 90% silver was over $6 over spot, right? So right now at SD Bullion, you've got 39 cents over spot. In September of 2015, I'm looking at a premium here. This is from archive.org, which is really cool because they do these web crawlers where they archive internet pages. They take snapshots of websites where they were at a specific date and time. So, here's a website, September 5th, 2015. If you wanted to buy 90% silver coins, you had to pay $6.49 an ounce over spots, right? So here's the thing about 90% that's really cool because right now the premium is dirt cheap, and there is the potential for not just the appreciation in the silver price, but also the appreciation in the premium price. So it's almost like a 2-for-1. It's like a win-win, both for premium and for spot price, if that even makes sense. Does that make sense, James?
Yeah, I mean, just the chart that I sent you, I think is probably the easiest thing for me to comment on these different prices.
Okay, let me see.
It takes aggregate data from 2008 to today, and I think that's the most important one.
Okay, there. I found that graph right there. Yes. So talk about that graph for a second there, James.
Okay. So this chart is it's basically taking in the pricing of 90% silver coins in the bullion industry, in the silver industry. 90% silver coins are really important to understand in terms of what's their price over spot, given their melt value, because Not only do you have big online retailers like us at SD Bullion, all around the United States, there's thousands of brick and mortar, mom and pop coin shops, etc. And a lot of people will buy and sell their 90% silver coins at those places too. But that the market is loose and that there's plenty of 90% silver coins out there coming in and out of the markets. We're buying them from coin dealers all over the place as well. So the market's loose when the premiums are low. Okay, that means that not many people are running in with their head on fire trying to buy 90% silver coins. But this chart right here that we're looking at, you can see there's kind of three humps to it. The chart starts in late 2008. We all know that was around the time of the financial crisis. And it kind of settles down into 2010. But even if you look at the end of 2008, so if memory serves, that's around $9 spot. And you add times 1.4, so you're talking about 90% silver was selling at $12.60 roughly an ounce, while spot was hitting at its lowest price in recent time. And so then you look down at 2013 and there's 2015, two massive jacking points of 90% silver. You know what that means? If you look at all the different things in terms of fiat spot price action, when the spot price has dropped, what that means is that strong hands are coming into the industry and buying massive amounts of physical quantities. So all those different three humps, they all reflect the fact that the silver spot price had gone down tremendously, and that the smart buyers, the ones out there who understand the fundamental reasons for stacking silver for the long term, they were coming in and buying it hand over fist. And that created a situation where the only way to keep up with enough supply was to jack the price up so you would kind of sequester some of the demand. Right now, the premiums are near 0%, and that is a good thing for people who are trying to acquire physical bullion. That could change. Who knows exactly how? It could be a situation where there's another crisis and people start running ahead first into buying 90%. But at the moment, they're very low. And I think Paul's right. We're near a 0% premium for 90%, which is historically a very low price.
Yeah, and it's interesting that you talk about, like, with low price, you get more people coming in and purchasing, because on the graph that you're showing there, we're talking about the end of 2015. And it's interesting because what I had brought up about the premium creep, if I can bring this one up, this was from September. So this is near the end of 2015. And that was when silver was bottoming. And 13, I think it was 67. I can't remember the exact amount in December of 2015. But if I can move my head here, the day that this web archive snapshot was taken, there was a spot price of $14.50 in 2015. So that means that per ounce, right, if you wanted to get an ounce of 90% silver, you were paying, $21 per ounce, right? Even though the spot price was only $14.50. So that goes to show your point, where when the price is just getting ridiculously low, strong hands come in and they buy it. And since there's a finite supply, it can really push up that price there.
Mm-hmm. Yeah, for sure.
Excellent point. And just talking about, why, because I think it's important, right? Because, why is now a good time to buy silver? I look at it as a couple things, right? I look at it as discipline. That's one of the reasons that I own silver. And I look at it as discipline because, discipline is important in all of life, right? And that includes investing, that includes saving. Savings requires discipline. And I think one of the best ways to maintain discipline, you can buy physical gold and physical silver, right? And now, if you're local, if you need to sell it at a local coin shop, you can do that in a day. If you want to sell it online, you can do that, within a day and just get it to the dealer. If it's internationally, it might take a few days. But the point is, it's ultra liquid. But if you have gold and silver as savings, you do have to, if you do need to tap into those savings, you do have to actually sell something that's real. So what is my point with that? You actually have to think twice about what you are doing. And if you think twice about what you are doing, what are you doing? You're engaging in activities that are, revealing that your life is full of discipline, right? And that's how you get ahead in life, is by making sound financial decisions based on a disciplined lifestyle, which includes saving for a rainy day, saving for the future, saving for retirement, saving for college, saving for all that stuff, a lot of which can be done with gold and silver. And it's funny because I'm bringing this up because when I say you have to think twice, even though it's highly liquid, and you can get on the phone right now at SD Bullion and sell some silver, right? You can go down to a local coin shop right now and sell some silver, right? So there's no problems buying or selling any time of the day. I actually have a couple paper bonds, right? 30-year bonds. And do you know how hard it is to try and cash in one of these government bonds? I mean, no bank will take these bonds, right? If you want to cash this bond, you got to send it into the United States Treasury Department. You got to send in like photocopies of your passport. I mean, all this crazy stuff you got to hoop through just to cash in this bond, right? They talk about the bond market being all liquid. Maybe that's true in the fiat digital sense, but, I'm kind of running off in a tangent there, but
yeah. Well, go ahead, Paul. I think your point is simple. It's one thing that people love about gold and silver is that it kind of makes them to be a disciplined. Say they have income that's coming in, they always commit to dollar cost averaging, to putting a certain amount every month into buying physical gold and silver, because at these spot prices, they essentially believe that over the long term, it's a smarter way to hold money or capital than, for instance, having everything in all your fiat currency basket or having everything in another basket. It's good to have a prudent position in precious metals, and people like to do that slowly, the dollar cost average. So for the guy out there in the chat who's asking whether or not silver eagles right now at the spot price are worth buying, et cetera, et cetera, the casino mindset is not what you want to get into. Don't get into this mindset of being like, oh, I bought and the silver spot fell and now I'm a loser. It's like, no, you bought some bullion, you disciplinedly saved some hard money, and you're probably holding it for years, probably like 5-10 years out, or even longer, maybe for your lifetime. It's just a way to hold something of wealth that's completely outside the financial system. And at these spot prices, $16 for silver compared to every other asset class out there right now, it's just amazing value. In my opinion, the long term, you're going to be missing these days, and we'll look back sorely on those days. I'll actually be happy to get out of these days because I'm kind of sick of the sentiment it's been around this industry for the last 5 years. A lot of losers in this industry in terms of complaining and people not understanding the longer term perspective. And so it'll be nice again to get some bullish sentiment back into this industry.
Mm-hmm. Well said. Much better than I could even say it. So I just wanted to bring that up as far as, a couple of reasons. Mm-hmm.
It also takes out the emotion. It's not like you're day trading. Like day trading is a very emotional thing. It really requires someone to have a skill set mentally and a stringent discipline the way that they do it. For instance, if you go to sell gold and silver, it's a physical object. So you're either going to have to drive the stuff somewhere, you're going to have to think this through, or B, you're going to have to ship this stuff. And that's not easy. Anyone who's ever shipped bullion and done it intelligently, it's an hour or two of your time to do it correctly and intelligently. So it requires slow, more thorough thinking, I think, than some other of these paper investments that people are out there constantly touting.
Yeah, exactly. Because my point is, with that discipline, if you just have some money in a savings account, right, it is so easy to just, Super Bowl's coming up, I'm going to buy this 65-inch TV, and then there goes the discipline through the roof. Just worked hard saving up that money, and then it's gone just like that. But, with gold and silver, yes, you can buy it and you can sell it at any time, but you have to think it through, and it's not just like a total swipe my credit card, and there you go, flat screen TV in 3 days, right?
Right.
So, are there any other reasons why you hold gold and silver there, or James?
So I'd say, to be very frank, and my wording's not going to be extremely eloquent, but it really drives down to two things. It's a fear of loss, and it's also a potentiality of some gain. Mainly, I'd like to keep what I own and earned, in terms of income. So I like to own assets that can't necessarily be frozen or devalued or be grabbed if you get in a situation, unfortunately, where someone is going after your assets. So it's nice to have a position of wealth that's completely difficult to track and trace. Another thing about it in terms of the pricing, like I said, $16 silver is cheap, and I believe that. $16 silver in terms of fiat US dollar price is a joke. I ultimately believe we're going back toward 50 and beyond 50. And so there'll be people who will run in at that time and they'll be speculating in the precious metals. But for those who bought the bullion at these price levels or any of the price levels below 20, I think in the long term are very, very, it's a very, very good sound decision. So it's a combination of both. And Paul, I guess the greed aspect is the sense that I know the crowd's going to be coming to this industry. I've seen it happen before. In 2011, I saw it. And once it gets a little bit over frothy and stuff, you might want to take some of your position off and start moving into other asset classes. But always holding a prudent position in silver and gold, I think, makes sense. Our forefathers suggested highly that we use it as money. And my hunch is that you're always going to want to have some position of your wealth in it. So I'm right now way too long. I have way too much of more than what it should be a prudent position. That's just because I think the bet is so obvious and so no-brain that I put a lot more into it than perhaps others might.
I think so too, especially with silver. Well said, excellent points. And there was something that came to mind, but it completely went out of mind, to piggyback on something you said. But I wanted to see if there was any more question in chat before we wrap up today.
There's one, and it's a question from Gun Fan. He says, thanks. In normal contrarian mentality for purchasing stocks, when everyone is saying buy this stock, the smart money is getting ready to pull theirs out. What's the difference with gold? And what if they're waiting for everyone to dump their money in gold and then they pull out? This is more of like that casino mentality, I think, where it's kind of like, oh yeah, what if they in the derivative markets are playing games with the paper price, and then I buy, and then all of a sudden, a month or two later, the spot's fallen by $100, $200. This is more the concept of like, no, you're buying bullion for like a long stretch of like 5 or 10 years. You need to be thinking in terms of what's the federal government got to do to get out of this record level debt hole they put themselves into. Mm-hmm. And what they're going to have to do is default or debase. And so whatever they do in the short term in the paper markets, it doesn't really make that much difference unless you're a day trader or a short-term trader in various derivatives or mining shares. That could be problematic if you're in mining shares. Those things are extremely volatile. They've gone up a lot lately. They could go down a lot too, and they can go bankrupt. Bullion, no, it can't. It's in your hand. It's what you own. Essentially, the only risk you have with bullion going to zero is someone flat out stealing it. That's really all you got. So I don't like a lot of risk. I don't like a lot of leverage in any of the stuff I do with my savings. I'm pretty prudent in terms of I just don't like a lot of risk. So bullion to me makes the most sense given the risk reward profile. The fact that the downside potentiality for bullion at these price levels versus the upside potential where it could go is so skewed for the trade. That's where I'm at. It's like at these price levels, it makes total sense. Call me when it's $40 silver, and maybe I won't sound as bullish. But at these price levels, forget it. If you're talking about 5 or 10 longs, 5 or 10 years out, it's get your silver eagles, get your 90%, get a prudent position, and just hold it and wait it out. You're going to see they'll perform much better than other asset classes currently.
Yeah, and it's weird. People don't even realize that our money was silver, and you give them like a 90% silver quarter, and like this feels weird. It feels different, and it does, right? But the other thing that I wanted to say, that one point that I wanted to piggyback on, every single thing that we're talking about here is in light that there would never be a global monetary reset of some sort or a debt reset, right? So, I mean, it's all bets are off when there, right? And I'm not saying, and that's a topic for a different day, right? We're not going to go down that road today. But everything that we're talking about is just a natural progression of what goes on with markets and what we think is going to go on with the silver market, right? So, this is what's coming naturally, even without the reset. So, yes, I think that it is a very bullish outlook right now. And I think you're right. I just think the value is there. And even the gold to silver ratio dropped from 96 to 98, and it's still screaming buy silver. And I mean, that 90%, you really can't go wrong with that. Any other final questions you see there in chat, James? I see.
Just to follow up a little bit on that point, you have gold is now a tier 1 asset in the banking system. That means it's on par with any debt instrument like the U.S. bond or this or that. It's every bit as sound as that on your balance sheet. Used to not be that way, and that was how we got into the situation where gold leasing became normal, and that these paper spot prices that people freak out about and don't realize that it's more or less it's like a half-truth spot price discovery market. It's probably worse than that. So people don't even understand that. They probably don't understand that central banks own like half of the physical bullion of the fine 999 bullion that's out there. They own about half of it. So if you have gold, you have essentially the people who issue the money power who are buying half of it out there. They're buying at record levels since they haven't bought since the London gold pool days. I mean, these are all facts, and it's, you can go look them up and check it out. But whatever happens in derivative markets in the next few days or the next few months it doesn't take away from these facts. These are facts, and they're sticking. And so it's, to me, and I always try and take a longer term view instead of what can happen next month. And so that's essentially what I'm trying to hammer for gun fan out there.
Yeah, and it's cool too, because like you take a longer term view, and it takes a while to get to that longer term. But once you get there, it's like, wow, we're in the longer term now. It's like I was buying silver at $5, and now it's 15. 15 years later or whatever. So, the long term is the long game, but all of a sudden you're there, and when you need it, you're like, oh, right, this is great. I'm glad I was smart 10, 15, 20 years ago. Look at when we look back in hindsight. So I think we'll wrap it up here pretty soon, James. When will the silver shortage take place? Well, right now premiums are dirt cheap. There's nobody coming in. So as far as the coin market, right, there's not a silver shortage in the coin market right now.
The answer on that, SG, is probably when you have another financial crisis or calamity or concern about currencies. Think about 2008. What happened in the silver market. That was a silver shortage of investment grade products, from 1,000-ounce bars all the way down to the smallest coins. There were days where, me working in this industry, we literally didn't have any silver in the inventory. We had a gold kilo or two on the shelf. That was literally it. There'll be days in the future at some point. My belief is that there'll be another one of these situations where you're going to have no ability to buy any of the products unless you're ready to pay 2, 3, 4 times potentially what the spot price is telling you. That's essentially where we could get to in terms of how bad it could get crisis-wise for bullion. And so having it ahead of time when most people don't care, when there's not that many people on this watching right now, this is the time to be acquiring it, especially when it's been showing some bullishness of late. So
yeah, exactly. Yeah. Right? Like when a storm is coming and you go to buy bottled water and all the cheap stuff is gone, and then the Aquafina and the other brand is gone, and all that's left is like this, $5 quart of Fiji water, and it's like, well, how am I going to use this for the next 3 days? I can't afford that. But exactly.
And then the price gouging kicks in, and then that's the other part, is that in 2008, 2009, people were buying price levels that were incredible. Silver Eagles at like $17 an ounce, even when the spot was at $9. That was very, very common. And people were doing it because they were afraid their bank account was going to fail. Right? I mean, that was why they were doing it. It was fear. And this is probably going to be a fear trade. This is not going to be a greed-ridden market. This is going to be a market about, I want to keep what I have, because there's a bank run everywhere. There's a run on everybody wanting their money back. If you have bullion, you're not going to be freaking out, at least a prudent position, because a good portion of your wealth, you don't have to call anybody to get it. It's right next to you, buddy. It's hidden wherever you hit it.
Mm-hmm, mm-hmm. Well said. Excellent points. Sitting here at 1661, 1423. We're looking pretty good going into the rest of the week. We'll see. I'd like to thank everybody for coming and joining us today. Mike will be back next week to host the show. Struggling through it again this week. Got my Silver Doctor shirt on. Links in the description if you want to get one. And give the guys at SD Bullion a call if you wanted to get some $100 face bag and 90% at a heck of a deal, 39 cents over spots. James, it's been great talking to you. Any parting words?
Oh, yeah. If you get that 90% silver and you have, this is kind of a controversial subject, but I was really nerdy last 4 or 5 months ago, and I went out and learned how to properly clean 90% silver coinage. And so check out that video. I did it on SD Bullion's YouTube channel. There's a lot of ways you can take some of that old forefather grime off those coins. And one of the ways is getting a machine with like a jewelry roller. I literally did that, and it was pretty impressive how it ended up. So check out those coins, because when you see them really, really shined up like that, it's impressive. It makes you realize why our country became as great as it did, and perhaps maybe why we're not as great as we once were.
Exactly. Well said. The FinMcCool also says options expire tomorrow, Fed next week. Yeah, it's going to be a fun couple of weeks to watch the charts. We'll be back next week. We might tweak the time a little bit since it's the Fed announcement. We might do live coverage of the announcement. We'll see what we do. I would like to do that, actually. But yeah, thank you for bringing that up. FinMcCool, it's going to be some exciting times from now till the end of next week. Until then, James, thank you for getting on the spot and joining me again this week. Everybody tuning in, thank you. It's been grand, and we will see you same time, same place next week. Be cool, be real. Thank you.